Hello, everybody, and welcome to today's morning coffee with Mike. We are talking about how and when to sell into strength. This is actually going to be part two. Get my slide deck going here. Part two of a topic that we started talking about a long time ago. In fact, I believe it was about 2 years ago that I did the first uh, how and when to sell into strength. Back then, we spoke about selling based on R multiples, making selling into strength a habit, and picking targets. And I encourage you to watch this video because it's quite good. The link to it is going to be posted down below. But for now, there is one thing that I want to emphasize before we get into part two of selling to strength, and that is to make selling a habit. Selling into strength is counterintuitive to most of us, and the reason why selling to strength becomes so challenging is because hey, you you buy these stocks or cryptocurrencies or forex pairs or whatever it is that you're trading, and it's moving in your favor, so it becomes counterintuitive to sell those because it's doing exactly what you wanted it to do. Now, the reason why it's so difficult is because, well, when we focus just on the individual trade and this one trade that we're in is doing what we wanted it to do, we're not focused on the bigger picture. We're just focused on that one trade. We're focused in on the minutia. So if we broaden our perspective and we start thinking about the system, we're not just thinking about this one trade that's doing what we wanted it to do. We're thinking about the system as a whole. And in thinking of the system as a whole, that's where we could start to think about locking in those gains. Because if we don't lock in the gains and they start to roll over and cycle back into okay gains from good gains, or from great gains down to good gains, or from good gains down to no gains, then that's going to make our progress very difficult. So we want to make selling a habit. We want to get a point where our selling is automated, or a second nature, at the very least. And the way that you could do that, the way that I ended up doing that, was simply forcing myself to sell those gains into strength. The moment that uh, an alert would go off, I'd make the sale. To further automate the process, I would set up uh, orders to automatically sell into strength when price would hit my target. So, in doing it that way and making it into a habit, it starts to become easier. So, let's move on. All right. So today we're talking about enhancing your selling plan, how much to sell and when, adjusting when we're going to sell based on performance, and using the R multiples that we spoke about in that first session, using the R multiples as a qualifier. Now, let's talk about things that you should already know, because if you're diving into the deep end of the pool and you don't know how to swim yet, then you might get into trouble. So at this point, you should already know your setups. You should already know when they're working, when they're not working. You should have clear definitions for what your setups are. If you're just taking trades because somebody happened to say it was good, then well, you need to go back and get clearer definitions on your setups, because you'll already be struggling if you don't have that part. You need to know how to set stop losses and how to raise those stop losses. If you enter a trade and you don't have a spot where you will cut the loss if it's too big, or if it breaks some sort of uh, technical level, then well, what you'll end up doing is flying by the seat of your pants. you'll be trading emotionally. You'll start to look for reasons why you should continue holding this trade. Well, it's down 5%. Maybe it'll bounce back. It hasn't dropped that far. It's had a certain range. Now it's down 10%. Well, I believe in the company. I believe in the CEO. Now it's down 15%. Oh, well, now it's getting down to major technical levels, right? Now it's a long-term play. And we could go through all sorts of mental gymnastics if we don't immediately have the plan, right? If we don't set up the selling plan where we're going to cut our losses before we even enter the trade, we could get into all sorts of problems. So make sure that you're setting your stop losses and you have a plan on how you'll raise your stop losses. And finally, too, how much to risk. This goes into position sizing. How much of your account should you put into this one trade? And then how much capital will you be risking on this individual trade? You should know all these things by now if you're going to continue with this here. If you don't, then you could check out our Mara Elite Premium service. Well, we have uh, a wide variety of lessons that talk about each of these topics, and you also work directly with me and our team, and you'll be in contact with us every single day, and you'll be able to ask us questions. So if you're interested, go check out the Mara Elite Premium over on marawealth.com. Now, to know when and how much to sell, you're going to want to consider a couple of things. You're going to want to consider what is your average gain. You're going to want to consider what is your most recent performance. And there's a couple of reasons why you want to consider these things in particular. Now, you want to consider what is your average gain. And well, what's your average gain for the year? Let's just use a round number. Let's say that your average gain on the year is 10%. On your winners, you're making 10% on average. That's great. Does that mean that you should be selling a portion of your trade at 10% every single time? Right? It is your average gain after all. Well, that could be a good starting point. If you didn't have any other selling mechanism, then you would want to perhaps start there. But I think that we could do better than that. And the way that you could do better than that is not just by looking at your results overall. What you could start doing is looking at your results on a more recent time frame. Take a look at what your recent gains have been over your last 5 trades, over your last 10 trades. And then from there, you'll start to have a better feel of if the market is improving for your system and if it's deteriorating. Sometimes trades will run much further, right? Well, if you're at this point, I'm sure you've experienced this. Sometimes you'll get a few gains, a few stocks, a few whatever it is that you're trading that will run significantly far. Sometimes you'll have a 20% gain, a 40% gain. And if you're like me, you've probably noticed that these types of winners, these types of gains tend to cluster, right? So it's not where you'll have a sporadic 20% gain, a sporadic 50% gain. Those types of winners will start to come in waves. And when you're finding these gains in waves, what will start to happen is that if you are selling based off of just your average performance, then you are cutting off the vast majority of those big wins. Here's another thing too. If you plan to sell at the yearly average 10%, well, what happens if the condition changed? What happens when the market starts to get choppy? Maybe you're only averaging getting to 6%. Maybe you're only getting to 5%. And then all of a sudden, you're not taking those gains anymore. Instead, the stock is moving right up and then it's falling right back down, and you are sitting at break even. Maybe you're sitting at a loss. So What you want to do then, you need to track your performance. You need to track your performance and you need to track what your average gain is. You need to track what your average gain has been over your most recent trades. And for extra bonus points, what I like to do is to track the high watermarks of my trades. Now, what's a high watermark? The high watermark is going to be how far does a trade get while I am in the trade? For example, well, let's share this chart over here right now in Bitcoin. We'll drag this over here. All right, so let's see. Over here, if we were to have entered Bitcoin and Bitcoin from this entry back on October 16th, well, when it started to break out here, it's up 33%. That's great. When is the appropriate time to start selling into strength if we were to do this process? I think that it's going to depend on, well, what you part of it's going to be, well, what has your recent performance been? And another part of it too is going to be the idea of moving incrementally. We want to move incrementally. Well, what does moving incrementally mean? It means that we don't necessarily want to sell everything all at once, right? So we could start to sell off bits and pieces on the way up. Now, I see Jawei is in the audience, and he's the one that sparked this conversation. So thank you for being here, and I hope that pronounced your name correctly. So the question that he had asked earlier was about um, when should we sell? How much should we sell on the way up? And I think that it's going to change and it's going to depend on uh, your most recent performance. So let's say that your most recent performance down here was, I don't know, you're making 10% per trade. And now price on this day here, let's get this tool open. And let's just say that you started out risking about 5%. On day one, price runs 7%. Okay, let's say that you held that. Let's say that over here on the 23rd, price gets to 10%. Let's say that you sold something there. Should you sell everything? No, I don't think that you should sell everything. I think that you should start to sell portions of the trade. And here's how I personally like to manage my trades. The first thing that I like to do is to uh, I'll sell a portion if let's break it down this way. Now, let's say that I'm doing well. Let's say that the market is working in my favor, and I'm observing that I'm at about a 10% gain on average that most of my trades are doing there, and my hit rate is up, right? My batting average. So let's say that 50, 60, 70% of my trades are winners, and most of them are getting to 10%. Great. Then what I would want to do is to start to sell. Maybe I'm taking off, say, 25% there. Maybe I'm taking off 10% there, and it's getting to this point. I just saw a super sticker come in. First time I've gotten one of those. Thank you, Jaiwei. Um, and I saw that you asked a bunch of questions in here. I'll get to those momentarily. Uh, so, what was that? Yes, so we will sell a portion as price gets to 10%. Then after that, we don't want to sell everything. So perhaps the next thing to do would be to sell at a high watermark. Right? So what's the high watermark? The high watermark is how far the trades get while we're still in them, right? Because not every trade is going to behave this way. Some trades might behave like, well, let's say this one here. This was a recent winning trade for me. ONTO. A lot of marks on this one. This one here, I bought in over here. At this point, I don't know if you could see it that well. Let's make my face a little bit smaller, make the chart a little bit bigger. Over here, I sold 50% of my position at 5%. Now, you might ask yourself, why on earth would I sell half my trade at 5% gain? The reason why I sold my trade at a half my trade at a 5% gain was because most of my trades at that point were only getting about maybe between 5 and 7%. So I want to lock in the majority of those gains because I don't know which trade is going to be the winner or the loser. I just see what's happening now and I'm able to determine, is price behaving well or is it behaving poorly? Am I getting good signals or am I getting danger signals where I should look to start to exit the trade? So that's why on this one here, I'm selling 5% up there, and make this bigger again. So I'm selling 50% here at 5%. And then when I get to 10%, I'm selling another 25% of the position. So I'm progressively selling into strength on the way up. I don't know how far this is going to run. Now, at that point, I've sold 75% of the position. Why not sell all of it, perhaps you're asking? The reason why I wouldn't sell all of it into strength is because I don't know how far it's going to go. I don't know if the market is getting better. The way that I'm able to know if both the market is getting better, if the trades are getting better, and if my selection is improving is by allowing the trade to run as far as possible. And I need to do that not with the entire trade, but with a piece of it. So that way I could start to gauge the strength. The part of my objective with trading, right? So this is where we could get a little bit more detailed too, and start to talk about our own personal objectives, right? Part of my objective, I want to cap my downside. I want to hold on to my gains. I want to compound my wealth. I want to compound my account, and I want to do that as quickly as I can. I also want to put myself in a position where I can gauge the market's pulse. It's difficult to gauge the market's pulse if I don't have anything in the market. If I'm taking a trade, I'll have a much better feel for what the market is actually doing versus if I'm sitting on the sidelines. Now, uh, with this here, well, with this trade, bringing this one back up, was able to sell into strength based on this, and I didn't know that price was going to roll right back over here and die. I'm looking at this in hindsight. I think that those were pretty accurate sells, wouldn't you say? Where selling a good chunk here, selling another bit of it here, and at this point, I'm out of 75% of the position, and then selling the rest over here, and then avoiding this whole mess. That's not predictive. That's taking a look at what the results actually were and using them to my advantage. Now, I know that we did have several questions come in, and I want to get to those. All right, so let's see here. Let's go to Jagwe, and we will share some of these. All right, so thanks for sharing. When the market is marching higher, there will be many new opportunities every day. It is very easy to buy more than planned and risk 8%, 10%, 15% in a couple of days or more. But the old position is not raising enough to break even yet. If we wait until the old position to raise 1R and the stop to break even, it might take 2 or 3 weeks at that time. It's too late to open new positions since the market has been marching for 3 weeks. It is too late to buy since the market might already run 10%, 15%, potentially topped. Okay, So here's what it sounds like to me, and um, let me know if this helps you or not. The the time to take a trade is when we find a high quality trade. That's actually one of the first slides that we had spoken about here, right? To cycle back through this. Yeah, you should already know. Yeah, your setups when they're working and when they're not. So part of that statement is having a clear definition of what your setup actually is. And I will share with you uh, my my trading journal. I actually share this trading journal inside the uh, elite program that we were talking about before. There's a lot of things that I include in this spreadsheet, but one of them here is the setups. Make my face a little bit smaller so you could actually have a glance at these. Uh, Many of these are included in the book, the Trading Mind Wheel book. But this is the framework that I would recommend using for defining your setup. You want to come up with a name for your setup, like it says over here. Right, you don't have to use the same setups that I do, but you should have a name for your setup, and then go about describing what is this thing. Where do you find it? What time frame? How long is it? How deep is it? What's the look and the character of this setup that you're looking at? Because if you don't know the look of it. If you don't know the look of the setup, if you don't know what the character of it is, how deep it should be, how long it should be, that's where a lot of people start to get into trouble because they're taking random things, and because they're taking these random setups or just random trades, they get random results. So if you want to have consistent results, it stands to reason that you should be taking consistent setups and have consistently well-defined setups. So that's where a process like this comes in. Then you want to know what type of market should you take this setup in? Should you take it in all markets? Should you take it in some markets? When is the time that your setup tends to perform the best? Know those. And then start to come up with boosters, right? What makes the setup that you found, what takes it from good to great? List those things out. And then after that, start to come up with models of these setups. Uh, find a model, mark it up. Right here's an example of a pullback buy that I marked up here. This one was 15% deep. It was 35 days long or 25 bars long. Relative strength had just started to turn up. The volume was declining. There was also supportive action over here around the 21-day and the 50-day moving average. This is already in an uptrend. And also looking up here now, the stochastics were positive as well. All things that I like to see uh, in my setup. So great model. And because I have that model, when I start to look for those setups again, I have something that I could go and compare it to. I could say, "Oh, what I'm seeing right now in the market, does it match this one that we just spoke about? Oh, yes, it does. Great. Put the trade on." Or maybe it doesn't. And then I'm able to toss that idea a lot quicker. And it just it makes our process that much more efficient, right? Like all the stuff that we're talking about here, this part is the work, but just like it's just like if you were to paint this room, right? If you paint this room, you could just get some paint cans and start tossing them onto the wall, and you would be done quickly, but you'd have a mess, and it would take you a long time to clean up that mess. And then you need to start from scratch and try to do things the right way. Now, if you are going to paint, and if you have painted before, you know that most of the time is spent in the prep, like putting down your tarp, taping the walls, getting the setting up your paint station so that way you don't drip everywhere. And then once you're all set up, then putting the paint on the wall is fairly easy. trading is very similar in that regard. So let's see. Are there any other questions? Any other questions here? Give you guys a few moments. I see some people over here watching on Rumble. Welcome, guys. Use the chat. See, we've got a couple of others coming in here. All right. So from I'm third, how much position size did you stay to tuned in with the market? All right. So varies. My position size varies depending on the market condition. So if the market is choppy, if I'm not making any traction at all, uh, in fact, why don't I bring up this Venn diagram I've made? You may have seen this before. Perhaps this is your first time seeing this, but this is a great representation of how I view the market. I look at the market through this Venn diagram. I use this as a lens into the market. I take a look at how the market itself is performing. Is the market in an uptrend? Is the number of stocks overall making new highs greater than the number of stocks making new lows? I'm looking at a variety of things. I'm looking at my system performance, right? So the types of stocks that I'm interested in, are they setting up well? Are they breaking out? Are they making progress? And then for my own performance, right? Because I have clear definitions of what a good setup is, and if I'm taking those setups that I've deemed as high quality, how are those performing? If they're performing well, then that's giving me insight about the market. And I'll also have profits from those trades to recycle into new trades and thus size up. Now, if the market is choppy and let's say I'm coming in from a cash position, then I will go much, much smaller. And for me, much smaller is typically risking about 6.5% of capital and risking at most 0.5% of capital. Oftentimes, I'll end up risking 0.2% of capital, sometimes even less. And that's another thing too that I almost forgot to mention, but I just remembered, and it comes from the reward to risk ratio. So let's talk about that for a moment here. Let's bring TradingView back over here. Now, let's just say that we went from averaging, say, I don't know, whoops, where did this thing go? Get another one over here. Let's just say that we were averaging, wanted to get to 5%, but it's making it super duper small. What if we go down to the 30-minute time frame, and then that should give us something nicer to work with here. Yeah, this will be good. All right, so let's just say that we went from averaging a 10% gain, right, where we could make 2-to-1 reward to risk if we're risking 5%, but now all of a sudden we're not averaging 10% anymore. Now, over the last 3 trades, 5 trades, 10 trades, we're only making about 6%. Well, if we're only making about 6% over the most recent trades, can we afford to really risk 5% on the trade? Well, not if we want to maintain the 2-to-1 reward to risk ratio. If we want to maintain that 2-to-1 reward to risk, what we need to do is find trades where we could set a stop that's significantly tighter, perhaps 2%, maybe 3%, somewhere in there. That's what I'll do. But I'm not just willy-nilly putting my stop at 2% or 3%. I'm looking at the chart. I'm looking at support. I'm looking at resistance. I'm seeing, is it tight enough for me to place say a 3% stop where my entry will be above resistance and my stop will be below support. So that way, if it breaks out or if it breaks down, it's breaking the pattern. That's the idea. That's the idea. And that's how the reward to risk ratio starts to become a qualifier. Let's see here. Here's another question that came in. All right. Jai Wei says, thanks, Mara. The question is, if you run Screener every day based on models, each day you will have a new candidate. However, you said portfolio heat is 5% max. How do you control yourself not to buy more? Interesting. So there's a few things here to unpack. So first, you said if you run your screener every day, you will have new candidates. Uh, if you run your screens every day, you will find stocks, but that doesn't mean that they're going to necessarily be high quality. When I run my screens, that's giving me a basis on which to work. Then as I'm looking through all the different stocks, I'm gauging whether or not they are high quality, medium quality, or low quality. If I'm not finding any high quality, I'm not taking any trades, period, and I'll just sit in cash. I could go several weeks. I could go a month or two without taking any trades at all. And the reason why is because I don't want to take trades that aren't high quality. Money isn't really made by just placing lots and lots of trades. Money is made by placing high quality trades. So if we go back to what our definition was of what the high quality trade was, and we follow the models, right? Because we're looking for the best. We want the edge, the one that's going to have the best probability of making us money. If we only focus on putting our money in those, then those will have a higher chance of working, but even those don't work all the time. So the idea then is to make money when the market starts to trend and starts to work, and we're only going to know that by placing these trades. And the other times, not give the money that we made back, right? Because that's what happened to so many people in this run here, right? Like if we start to look at the market here, and I'll just take my annotations off for a moment here, right? So here's the S&P. A lot of people made money in this area. A lot of people gave money back in this area. You don't want to do that. What you want to be able to do is make the money and then keep it. The way that you make money and keep it is by only taking high quality trades. Now, the next thing that you said here, you said that portfolio heat is 5% max. How do you control yourself to not buy more? Well, part of that comes from the trade management aspect of it. So if I'm raising my stops, then I'm lowering my heat. So let's just say, all right, and this is a little bit of an advanced question, but uh, Jay Wei, it sounds like you've read my book, and so you'll be able to follow along a bit. Let's see, what would be a good trade to talk about here with having your portfolio heat? Well, let's talk about Bitcoin. Bitcoin has had quite the nice move here. Right, so let's say that you're trading Bitcoin. Well, we could just as well talk about a stock. So if there's a stock that you wanted to talk about, let me know. We are a little bit over, but that's okay. But well, let's just say that you entered here, you set yourself a 5.5, 6% stop loss on Bitcoin, and it started to move up, and now it's up, up and away. Let's say that by this day here, when price started to push higher, you took your stop from down here and you raised it to break even. That would have effectively lowered your portfolio heat and would allow you then to add more trades because your heat is lowered. Now, does that mean that you should just add any trade? No, absolutely not. You should only add high quality trades. So if there's more high quality trades available, then you now have room because this bucket of risk here is back in your pocket. I look at the distance between where I enter and where my stop loss is as the amount I'm willing to pay to see if this trade is going to work. Now, if I raise my stop loss, then I'm paying less to see if this trade is going to work. And once my stop loss is at break even, then I don't have to pay anything to see if this trade is going to work because that money, right? The money that's out of my pocket is right here. And I've taken that and I'm putting it back in my pocket at that point. And that's one of the reasons why we want to get our stops to break even as quickly as possible. That's one of the things that I focus on. So I hope that this was helpful for you. Let me know if it was, and let me know what additional questions you have. This has been a great way to do these lives. I appreciate it. Appreciate you guys. And I will see you back here next week. We do these every Friday at 11:30 a.m. Eastern Standard Time. And of course, if you want to learn more, go over to marrowwealth.com, and there's loads of free information there. And there's also opportunities to work with me and my team. So until next week, have a great day. Take care. Much love. Peace out, everybody.